Good afternoon. Today is Thursday, April the 13th, and the time right now in Singapore is 12:52 in the afternoon. Overnight, we have the release of the consumer price index. It came in largely within expectation, especially the core month-on-month and year-on-year numbers. But on the month-on-month headline CPI numbers was very good. In February, we have the CPI number was the headline numbers at 6%. Now, last night reported the month of March, it came down to 5%. So on balance, that is a fantastic number. So the market actually initially rallied. Okay, we talk about equity market first rallied, but at 2 a.m. We have the release of the minutes from the last FOMC meeting, and that meeting reveals that Fed officials are concerned about the banking crisis that we witnessed last month may actually cause the US economy to go into recession. So they are worried about the banking crisis that may actually spill over into the economy at large. And then, but still they are intending to continue to hike rates. So the next FOMC meeting is going to end on May the 3rd. So the market now expect the Federal Reserve to actually increase that interest rate by another 25 basis point, which is 0.25%. So despite knowing that the banking crisis may actually spill over into the larger economy, the Fed continues to wanting to hike rates. So not sure why they still intend to do so, despite evidence that says that, you know, some Fed officials are getting worried. But let's see what happens. But the reaction is that in the second half of the day, after the release of these minutes, market started to come down. So we can see it basically erased the rally that we saw on the release of a very healthy CPI numbers that show headline CPS inflation is actually coming down. So now, based on the chart, in the Dow Jones, we have the high traded at 33,895 overnight, and prices started to ease back. And this ease back may actually continue into the weekend. We are on Thursday, tomorrow is Friday, leading into the weekend. So the market may actually close on a weak note. So be aware the market may continue to ease back, and nearby support is somewhere around 33,275, barring there is no other driver that cause the market to spook. Okay, so in the event the market continue to ease back on a more normal pace, then 33,275 may actually hold. Now the upside may also be quite limited, because as we go higher, the 34,334.7 is going to be where the market will be thinking that it's going to be a cap. So right now market is somewhere in between, right? So if you are not likely to take risks, then maybe you should stand aside and watch, because upside potential is getting rather limited. And if you buy at even at 33,300 points levels, it is still relatively high if you look from the perspective of where it actually started climbing from. Okay, so my idea is to step aside. Okay, I'm not prepared to go back in to buy, and not at these levels. Anyway, this is the S&P 500. S&P 500 managed to register a marginal high compared to last Tuesday. Okay, the high traded this time was 4,134.37, and then started to pull back. You notice on the 1 hour time frame, at the point when the market registered a marginal high, we see a long-legged shadow doji, which is usually seen to be a reversal pattern. Again, happening near where I think the area where sellers are congregating, that becomes significant. Okay, so I was mentioning earlier yesterday, and 4,133 seems to be the top. So yesterday we have a marginal top, but not much higher, and the market starting to come back down. Nearby support, if it holds, will be 4,056 to 4,072 levels. So we want to see whether this level can actually hold. If the market cannot hold, the next area that it may hold will be 4,022. Okay, so we watch these levels here. In the in the Nasdaq 100, we do not have any marginal high. This high that we saw at 13,204 was actually registered a week ago, last Tuesday, and the market has been coming down since, but it's coming down in a very controlled manner. So that leads to the idea that market may actually pull back in an equality three-way pullback to somewhere around 12,630 to 12,715. So this area here may be an area of support. So for those who are still bullish, you can consider doing day trade around here. But like I say, I am not very keen to do anything, whether to short or or to long. There's no incentive to go short because there's no confirmation that we are seeing a reversal, and buying at such elevated prices is a little bit hairy for me. So we look at Asia to give us some kind of clue. Now in Nikkei, we can see market continuing to trade higher to 28,147.7 this afternoon at midday. Whether or not it can continue to go up, but you can see over the last couple of bars, you can see the range is getting narrower and narrower and narrower. That means it may not have the momentum to trade much higher. So there is a possibility market may just stop up from here and started to retrace backwards in a three-wave corrective pattern, maybe to try the 27,300 level. So this is one consideration. Okay, and over in the Hang Seng managed to actually open and started to go below 20,000 very, very fast. And of course, just before noon, the market actually started to rebound. So currently it's just trading just above 20,200 points. But I think the structure tells us that perhaps the market still have a little bit more to the downside to consider. Nearest bottom here is about 19,500 points. Okay, so we look at this level to see whether it can hold. Okay. Over in the mainland Chinese equity market, the CSI market also break what I consider to be a nearby support, which is centered around 4,075. Market went down to a low of 4,070 before it started to rebound. Now the market is about 4,082 levels, but it looks vulnerable. I think markets still have a bit of a downside corrective pullback that may actually unfold over the next few days. Okay, over in energy market, we can see that crude oil continuing to ramp higher. Upon the release of the CPI numbers, it went to a high of $83.49 with very, very little pullback. So now I have basically given up the idea of waiting for a deeper correction. It does not look like it wants to pull back. So now the nearby support is $81.25. I'm not prepared to buy here. So I'm just going to watch and see if I can get some kind of more conducive price range to actually go into buy. Okay, but at this current point, it is just a little bit too rich for me, a price. Okay, over in gold, you can see the gold prices actually went up to 2,028.34 last night before it comes back down very sharply. So because of this drop back, and then there is this rebound, and this rebound is about 61.8%. So there's a possibility the market may start to trade to the downside in a three-wave corrective pullback. Ideally, the market find support around $1,993. That will be ideal because that will be equality move before the market go back up again. The other possible area in which it may actually go down, it means to say that it has a deeper pullback below $1,985. Maybe it will go down to $1,966 or $1,978. That could be another possible area to pick up some more gold. Okay, so we will have to see how things unfold. Now over in silver, we know silver has been a lot more firmer than gold, and we see last time we have a high at $25.67, and following a very sharp pullback, but it was kept below this high here, which is $25.14. So it did not actually close below this level, although it did penetrate it marginally. So based on what we see, there's a possibility the market may come back here, at most come back to and revisit this level before it round up again. So very, very little pullback in silver. Okay, over in dollar, we see dollar weakness continues overnight. Right now is in the cups of actually breaking the low in in April at 101.09, and there's a possibility it may actually go under this level. My target right now is about 100.4 to 100.8. So this area here should be able to hold back this onslaught of selling orders in the dollar. Okay, I think dollar is almost at a point whereby it's about to reverse. So we just have to be very mindful of the fact that dollar has been declining for quite some time now. Now over in the currencies, we can see, of course, if the dollar slides, the other major currency will start to rise. Okay, in the sterling, we can see dollar, the sterling versus the dollar went up to 125 overnight, and after breaking up this, breaking above this key, I would say key, I say this is a medium term or short-term kind of resistant area. So it looks elevated. So we will have to see how much more momentum it has to take this market higher. There's a possibility it may take out 125.25 though. Okay. Over in euro dollar, I'm a little bit conflicted because fundamentally I cannot accept buying euro. But euro has actually gone up to a very nice round number at 1.1. Okay, 1.1 is a very nice even number. So what do they say about nice even numbers? there's always a point of possible reversal, and we see prices starting to pull back. So if this is the end of this move here, then there's a possibility market may pull back to the lower end here around 109 levels. Okay, so we will have to see if market have the potential to come back 100 pips or not. Okay. And Aussie right now is in the area which I am more willing to sell than to buy. Although I am unlikely to do anything in the Aussie, but I think technically speaking, this area is a three-wave rebound. Okay, this area is 0.67 to 0.6730, and the market has come back this time, this range of price for the second time this week. And if the market started to slide again, and once it breaks the near-term support line, it will likely head towards 0.6565, which is my original target. Now, dollar versus the yen, we saw the high of 134.05 overnight, and market started to come back down. And right now, it's beginning to rebound from a low of 132.70. And this, if it work up to a three-way equality move up, then the target will be somewhere around 133.60 to 133.80. So look for selling interest around here for the market to come back here to 132 levels. Okay. Over in the dollar Canadian, it looks like very much like a replica of the dollar index. You can see prices start to fall from 135.55 and looks like it's going to break below 134 very, very soon. So again, if you believe the dollar index is going to break the April low, so the dollar Canadian chart looks the same. Okay, so that will be a reference point. Now over in Bitcoin, we saw recently Bitcoin has been on a tear, and it went up to a high of 30,575. This is traded on Wednesday, and the market seems to be pulling back. So if this continues to pull back, then equality point, ideally we'll see the Bitcoin come back to 29,360 levels. So if the market comes into this bracket of prices, it's actually ideal for buying. The alternate areas to buy obviously will be a deeper correction back into 28,500 levels. Okay, do watch out for these two possible levels to buy. But for those who are very adventurous, the pullback into 30,245 is actually within a bracket of prices which I deem to be more conducive to selling. If you are very aggressive and you are very comfortable trading counter trend, then maybe you can consider doing some kind of selling within this bracket of prices between 30,200 to 30,300 levels, and then put a stop just above 30,600. Okay, so you exchange this potential risk here for the downside at the bare minimum to challenge 29,360. There you have it, and I will see you again tomorrow. Bye bye.